Good morning. It's April 5th, 2023, and we're going to be talking about a new feature on the Longbow dashboard today called the Doomsday Dozen. Fortunately, on most days, we don't have to worry about major market corrections, but at Longbow, we know it's important to look for risk management signals before corrections happen. So that's why we've introduced Doomsday Dozen. It's basically 12 key signals that flag potential dislocations in risk assets. And we've created an overall signal, because I know I need things to be easy for myself, called the Doomsday Signal, which is really just incorporating all of those 12 scores. And then you can decide, okay, let me check on overall market risk, and do I want to do anything about it? So Longbow calibrates the risk from extreme fear, which you can see on the left here in green, and then you go to extreme greed on the right, which we're calling red. So you can quickly determine today's quantitative level of risk. So today we're in the greed zone at 63. You can see the big red number there. We're not in extreme greed. We're not in neutral. We're just in greed. But you also want to see, okay, what does it look like historically? So on the right-hand side, we show you, call it 1 year of the signal. You can see then when the markets were going up or going down, how did the signal change? So then you can gauge for yourself how accurate the signal is. And we have that historically if you're looking for that. And you might want to choose to fade the consensus risk level implied by the signals. For example, if you're going to see extreme greed, then you might want to adjust your portfolios for a more defensive stance. But on the contrary, if you see an extreme fear, that's maybe when you start taking off your shorts and you get to a more offensive stance. We don't have time to go through all the individual signals, but I'm going to go through a few that are actually signaling today, underlying this signal. So I'm going to scroll down here. You can see below, there's a whole bunch of charts, and you can see each of them, and you can click on the eye to learn what they are. But I'm going to go through a few signals here. First being the market strength. And what we can see here, it's extreme greed. Sorry, it's a little hard showing up there. But it's basically comparing the number of stocks hitting the 52-week high versus low on a major U.S. exchange. So when the delta is high, then investors are showing that they're confident in future market returns. But when the delta is low, the investors are pretty much concerned about future market returns. We also look at how a current reading compares to historical readings. So, if you're seeing on one end of the spectrum and then it shifts to another, we put that into consideration with the signal strength. We're seeing, call it a moderate signal here of extreme fear. So that's something that I would be watching. The next one is the safe haven signal. That's down here, and that's showing extreme fear. So that's the opposite side. We can talk about why that might be happening. But we look at the difference in returns for stocks and treasuries here in the US. So investors are bidding up the prices for bonds versus stocks, and investors are seeking a more defensive positioning. And as you know, we've seen that. We've seen it in healthcare. We've seen it in other positioning recently. But when investors are bidding up stocks versus bonds, then they're seeking a more offensive positioning. So Longbow also looks at how a current reading compares to historical readings to put today's information in context. So with an extreme fear rating, it's obviously different than that of a market strength signal. We're seeing investors unsure of rates and growth, so this is making them fearful. But if you're just looking for a quick fix, you want to know, where am I in my risk level? Do I need to do anything today or not? Overall, this kind of gives you a very quick reading, and it compiles a lot of data historically for us to create this signal for you and for ourselves as we manage our portfolios and risk manage those day to day. That's it, and I'll catch you back tomorrow.